This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay guys, let's take a look at the gold market. Well, the gold market currently is a bit boring, but not of course by the price actions. This price action is really tremendous here, but mostly by our possible participation in this action. Because as you can see, market, yes, it has shown this really significant plunge down, open on the high, close on the low, and has passed through the significant support area and so on. But market just has finished this area. No patterns have appeared yet. Nothing that could shed some light on what we could do here right now. Whether we should take the short position and enter a short with the further move to the downside, or we should conversely search for reversal patterns here and start thinking about taking the long position and so on. Unfortunately, currently the situation on the daily time frame, on the intraday charts, do not allow us to answer on this question. That is really a bit frustrating moment. But that's always happens when market just has finished some significant move. Speaking from the overall current situation, I think that we should not overestimate the strategy of this potential move down. So we should not speak that this is really all disappear and all bullish sentiment has been destroyed. That is the strategy. Market will continue to move down and so on. That is really starting of the long-term bear trend and so on. It's a bit early for that, because what in fact has happened? I'm now speaking about only based on the technical approach. Actually, market just has reached the 50% support area. It's right here. This is maroon line, is the 50% support of the whole move to the upside on the weekly time frame. On the weekly time frame, trend is still bullish, and what is more interesting is that it will remain bullish if your market will continue move right here. Also, market has hit the monthly pivot support 1. But guys, that is the normal action when the market shows the bull trend. On the weekly time frame, usually the monthly pivot support 1 should hold any retracement. Besides, recall that we have talked about this potential deep retracement within the previous month. Since we said previous drastic move down was really solid, it lasts for almost for a year, 8 consecutive months to the downside. The momentum to the downside is really strong and will press on the market and will not allow market just freely turn to the upside to form the V-shaped bottom and continue to the upside. That's really very rare happens, such reversals. That's why the deep retracement now is not some curious moment and something strange. Absolutely not. Of course, we prefer to see some more gradual action, so something of that sort when market shows retracement, and we actually do not want to see and do not like such actions when we see the retracements. But sometimes it happens, especially if we recall that gold market likes to show deep retracements, and the 618 level is the favorable level for preferable level for a gold market. So I do not see any problems with this retracement, although on the daily time frame it seems really just scaring. Well, but at the same time, I not like some moments that market has shown recently. And the first moment that I do not like much is the passing through this confluence support without any respect. So you can see that just like the hot knife through the butter, that is really significant support area. That's really a rather strong area. This combination, not quite agreement because target stands a bit extended from this confluence support, but still this is target of the ABCD pattern 1618 confluence support. No respect, just moving down right to the 50% support and some kind of the hammer pattern or something of that sort. Well, that's why when you see such sort of action, when from the one point of view the action in general is logical from the longer term period, but it's a bit look scaring on the lower time frame chart. In this case, it's better to find some definite setups, some definite patterns, and trade particularly these patterns. Stick with these patterns. And when and if situation in general will become clear, you could take the position, some more extended position in terms of time, so some longer time frame position. But until this will happen, it's better to stick with the clear patterns and wait when the market will come out from this turmoil. If you have read our weekly analysis, you probably have seen the chart of the TFTC report, Commitment of Traders report, and you will see that within the recent 4 or 5 weeks, the open interest hasn't changed. In fact, it stands flat. Almost with the most recent week when this plunge has happened on the past week, open interest even have decreased a bit. What does it tell us? It tells us that although market shows the moving to the upside, to the downside, this action mostly hasn't been confirmed by the trading volumes. So as this action hasn't led the market to increasing of the overall position, to adding more position on the market, to involving new participants in this motion. The open interest stands flat. It tells us that just the contracts that have been opened previously, the volume of the number of contracts on the futures market has been opened previously, hasn't changed. And mostly this indicates the indecision situation on the market. And that in turn tells us that any significant event that could come on the next week, on the nearest future, could shift situation drastically, as it has happened already here. For instance, the FOMC meeting of the 18th of September. That is really a significant event, and if some clarification will be made on possible contraction, easing of the quantitative easing program, well, anything could happen. Well, situation on the sea, although the Russia and the United States come to some conclusion concerning the some chemical weapon, but the situation is far from the resolving. Also, some pitfalls, some underwater stones could appear, and the situation really could change. Well, that's why I think that we should not overestimate, as I said, the value of this drastic move to the downside. We just need to work with our trading plan, search for the setups and try to trading. For example, we have the drastic move, but we also have some kind of the pattern here. I'd not call you to deal with this particular hammer. I just would like to show you the example how it could be done in general. You can't possess yourself for some longer term period or to take some long term trade here, long term position. But you, for instance, could stick with the hammer, drop your time frame chart, take position on the retracement, and make some profit on the potential continuation with this initial hammer that probably will have the target something of the length of it itself to the upside. Just take the profit and wait for another setup. That could be done, and that is very logical and in fact a reasonable approach to the market when it stands in some turmoil. If you remember, in February and March we particularly were following this strategy. We were searching for some setups on the lower time frames, traded, and wait for the other setups. Since market now is entering in the something of the same sort of action, probably we should return to the strategy again. Well, on the 4-hour time frame, in fact, is the same. No patterns, market shown some kind of the bullish engulfing, but that in fact mostly I suppose was the position close and profit taken at the end of the week, since really was significant plunge down on the Thursday, and that was just the, I think, the closing of the position. Now here we could just specify the levels to watch for. The first level that I would like to watch for is this area, 1355, 1360 confluence resistance. Next level is right here, combination of the weekly period resistance one and fib resistance around 1384, 1385 area. If market will form some patterns here or something of that sort that we could stick with, maybe we will more precisely will estimate the potential target of the retracement and whether retracement will start at all or not. But taking into consideration overall situation, what is going on here, I still think that market has significant chances to proceed at minimum to the 618 support area, because this action is really significant. Such candles can't just disappear on the market. They will continue impact on the market. Maybe market will show some bounce, but the chances of some deeper retracement is significant. We will see what will happen, but unfortunately, guys, right now I can't recommend you to take any position, because if you're bearish, market now stands at the support, and probably if you would like to enter short, it's better to wait for some bounce to the upside. If you're bullish, well, theoretically you could stick with this hammer and engulfing pattern right here, but personally I'm not very fascinated with it, mostly due to this action. I don't want to take the long position here, especially if you do not have any solid patterns on your break. Say if we would have, for example, head and shoulders on the lower time frames, we see some slowdown of this downward action on the 4-hour time frame, on the hourly time frame, or we have some butterfly with the divergence, the significant support, we could think about the taking long. But currently I think that it's better to wait a bit more here.